Dear students, welcome to the week 3 video tutorial. My name is Professor Sugu Thomas Samuel. I'm your course instructor for personal wealth management. So far in our journey on this particular course, we have understood about personal wealth management. Last week, we had discussed about financial planning. This week, we will deep dive into the concept of insurance. We will try and see what is insurance, why is it necessary for us to have insurance. We will also try and learn about the functioning of insurance. We will also be discussing why is it important for every individual to have insurance. So at first, let us start this journey by trying to understand what is insurance. In a nutshell, insurance is a safety net that is designed to protect people from any unexpected losses. You must have been quite familiar by now with the concept of two-wheeler insurance. If you have a two-wheeler, it's mandatory for you to have a two-wheeler insurance. Why do we have two-wheeler insurance? Just in case if we were to meet with an accident on a two-wheeler, the two-wheeler insurance to helps us to ensure that the repair costs are covered. So insurance is a product which runs on the principle of spreading risk among many participants, thereby which we can minimize the losses that we are subjected to. Now, we will be discussing some important principles associated with the concept of insurance. The first principle that we would be discussing here is the principle of utmost good faith. Both the insurer and the insured must act honestly and transparent. This principle motivates both the insurer and the insured to disclose all relevant information before engaging into the contract of insurance. It is necessary for both the parties to disclose all valid information, give out all the possible information regarding the insurance. The insurance company, it is mandatory for them to disclose the terms and conditions. The person engaging or taking up the insurance, it's mandatory for them to give all possible information, especially regarding their preconditions. The next is the principle of insurable interest. Whenever a policy holder participates in insurance, they must have a financial stake in the insured event. What does this mean? In simple words, let's talk about the example of vehicle insurance. If you have to take vehicle insurance, it is mandatory for you to have a vehicle. If you want to take a home insurance, it is important for you to have your own house. So with the help of principle of insurable interest, we can ensure that the speculative use of insurance can be discouraged. The next is the principle of indemnity. The principle of indemnity ensures that the person taking up insurance, they are restored to a condition before their actual losses. What does this mean? For example, if you have a vehicle insurance, unfortunately you met with an accident. With the help of vehicle insurance, you can ensure that the repair costs of the vehicle is covered, whereby which you are restored to a condition before the accident. So the entire concept of principle of indemnity ensures that you do not end up making profit from the claim. The next is the principle of contribution. If at all the participant taking part in insurance has got multiple insurances, the liability is proportionately distributed. Next is the principle of subrogation. The principle of subrogation ensures that the insurer can seek recovery from third parties after paying a claim. Next is loss minimization. The insured must take reasonable steps to minimize losses. Just in case, if you have an insurance for your vehicle, doesn't mean that you can drive around carelessly. You have to ensure that you have taken adequate amount of steps to minimize all the possible losses that may arise as a result of the accident. Proximity cause ensures that the dominant cause of loss of coverage assessment. So it is mandatory for the insurance company to carry out investigation. They would have to ensure an assessment is carried on before the release of the actual claim amount. So these are some of the important principles associated with an insurance policy. Let's talk about the functions of insurance. The first function that I would like to discuss with you in this video tutorial is the function of risk transfer. When an insurance policy holder participates in insurance, the financial risk is being distributed, and as a whereby which the damage arising as a result of loss is not transferred from the policy holder to the insurance company. Next is the concept of risk pooling. The next function of insurance is the function of risk pooling. So when the insurance company collects premium for multiple holders, they are able to create a corpus fund to pay for the claims. So this simply works on a rationale that every policy holder may not be needing a claim. Let's say if there are 100 policy holders participating, probably max to max, it may be one or two claims whereby which the risk is pooled among the multiple holders. Next function is the function of financial compensation. The insurance policy provides compensation for the losses which are covered. This may include medical expenses, repair of property, or replacement of the income source. The next function is promoting financial stability. When the policyholder has an insurance, this helps us in ensuring that any unexpected losses which the holder might be incurring, it might be reduced, and the uncertainty of these losses can be minimized. Next is a saving component. Now, in the case of some insurance policies, it would help in ensuring that the insurance holder creates wealth over a period of time. Now, let's talk about what are the rights of insurance holder. The first right that the insurance holder is entitled to is the right to information. The policy holder is entitled to receiving all possible details regarding the coverage, exclusions, terms and conditions with transparency in the case of any changes, which means a policy holder, before taking part in insurance policy, has the right to question the company regarding all possible information associated with that particular policy. Next is the right to a fair claim settlement. Claims associated with an insurance must be handled appropriately. It must be handled in a fair manner, just in case if there are any denials to a claim made by the insurance holder, it is mandatory for the insurance company to give proper detailed explanation, and the insurance policy holder has the right to challenge the insurance company's decisions. Next is the right to privacy. So all possible personal and financial information of the policy holder must be protected, and it has to be used only for policy purposes. So this ensures that the data of the policy holders is protected. The next is the right to renew the policy. So policies of an insurance company can be renewed under the same condition unless and until there is a valid reason for non-renewal from the company's side. So just in case if the company does not wish to renew the policy, they have to ensure that a proper notice is given to the policy holder well in advance. The last is the right to grievance redressal. If at all the policy holder has any concerns or issues, an appropriate resolution mechanism has to be created by the insurance company to ensure that the interest of the policy holder is protected. Let's now talk about life insurance in detail. So life insurance is a contract between the insurance company and the policy holder. Here, the insurance company guarantees to pay a sum of money to one or any of the named beneficiaries when the insured person deceases. This ensures that a steady source of income or a corpus amount of money is guaranteed for the beneficiaries mentioned in the life insurance. Now, for taking up life insurance, the policy holder must pay premium during the insurer's lifetime. So at regular intervals, this premium amount needs to be paid by the insurer to the insurance company. Now, let's talk about the steps that are followed when it comes to taking up life insurance. First is contract agreement. So all the detailed terms and conditions needs to be specified based on the pre-existing health conditions of the individual. A premium is determined. Now, there are two types of life insurance that we can have. The first is called as term life insurance. In this case, on the payment of premium at the end of the life insurance policy, just in case if nothing happens to the insurer, no amount of money would be paid out. Next is referred to as permanent life insurance. In this case, what happens is at the time on payment of premium, and just in case nothing were to happen to the insurer, then some form of compensation, some form of benefit would be given back to the insurer. Next is investment of premium. So by pooling in money from the insurer, the insurance company uses this money to invest into multiple sources of wealth creation, and thereby which accumulate wealth for the insurer. Now, in some cases, the life insurance policy may come with additional features and riders. This may be beneficial for the insurer. Now, whereby providing life insurance, there is a financial protection which is provided to the insurer. Next is the concept of mediclaim insurance. In mediclaim insurance, the insurer is protected from any possible medical expenses that may arise as a result of illness, injury, or hospitalization. In other words, mediclaim insurance helps in covering the medical costs which are associated with hospitalization. Very often, mediclaim insurance policies works on the concept of reimbursement, which means the insurer needs to incur the expenses, and on incurring of the expenses, how much ever money is being incurred, it gets reimbursed back to the insurer. Next is safety net. So where by taking a mediclaim insurance, the policy holders are not burdened with any unexpected very high medical bills, just in case at the time of needs. Now, what are the benefits of mediclaim? First is peace of mind. So whenever an individual has a mediclaim insurance, it reduces the stress and anxiety which is associated with it. Next is timely medical intervention. So whenever an individual has mediclaim insurance, it ensures that they are not discouraged from undergoing any possible means of procedures as a result of the increasing medical cost. In most of the cases, the mediclaim insurance policy allows coverage for family members as well. Finally, most of the cases, mediclaim insurance comes with tax benefit for the individual. So with that, we've come to the end of week 3 video. We hope that you have learned something from today's video tutorial, especially regarding the working of insurance. Thank you.